May 5th to 2024. So, going to talk about this day and maybe this day. Trying to find a good way of doing these recaps because I'm still, I don't know how to make them very helpful. Maybe I just need to listen or watch them again. Um, but I'm still figuring it out. Um, I've drawn a lot of lines on the chart here today, and I probably will take them out and then maybe redraw them again because I'm trying to get better at my trend lines. But they're all in there for a reason, and they really highlight certain things that I think is useful when you're trading the day. Actually, maybe I will talk about that, and maybe someone could leave some feedback on what that is, because I find when it comes to drawing trend lines, tick charts tend to show better respect to trend lines than the 5 minute chart where you get overshoots and undershoots and things like that. At least from my own way of drawing them. But again, it's all very arbitrary, you know. Who said the market is respecting that? So certain things I'm going to talk about today. I kept saying in my Instagram that this was yesterday's high. Well, yesterday's high was here. This is the high from 2 days ago. And this level was pretty important. But I think what I think I could do is talk about my approach to trading this day and how I would approach planning swing trades. That I think is a lot more useful. Yeah, I think that would be more interesting. Okay, all right. So first of all, it was a Friday. So weekly chart takes a lot more precedence on this day because the support and resistance on the weekly chart is useful. And in fact, I've just seen a level that the market tested that I did not mark, which is this level, this low. I'm actually going to mark it now, just because I didn't, at the time I didn't even look at it because I took all my levels from, the time frame I was looking at. So let's look at that level. It's not accurate. It's giving me 5166.24. So let's make it 5166.25. Let's lock it in. Okay. So that level is this week, April 12th low. Right. So let us check that that level is correct. So April 12th, this level. And if we move back here, does not look like that is April 12th low. I think this is the correct level. So I'm going to do is, but that level was a very good level here. So I have a few questions. So April 12th was a Friday, and that was the low on April 12th. So what I'm going to do is I'm going to take another copy of this. And move it down here, and then let's just look again on the weekly chart. Oh, right, that's the wick. That's not the low. Someone's probably saying that, Jid, that's not the low, that's the wick. This is the low, that's the close. Yes, okay, that's where I made the mistake. I wasn't the low, but the close, and that is the close. Yes, actually, it's a bit higher than that. This is the tick chart, so this is probably not an accurate close because it probably still carried on. The best way to look at it is if we look at, say, the electronic trading hours on that day. So that would be April 12th here, and the close, it's just, all right, so this is the close. Yeah, so this is the close. So we're probably a bit too high. So that's, oopsie, let's just move it, unlock it. Then we'll move it to the close and then make it more accurate, 75. Lock it in. All right, so we now know the close. And then the low, since it's the close, I'm going to give it a different color. I normally make the close orange, but I'm using that for gaps now. So I'm going to give it another color. Maybe we will go For a color that appears on both the dark and the light chart, we'll use green. Okay, so let's go for green, and green from now on will represent closes. This is the low. So unlock. Oopsie, I locked it. So unlock it. The reason why I lock them is so it doesn't get deleted when I clear the screen. And this low on that chart would be, oh, that is correct. It's first time lucky. Didn't even need to do anything. All right, so if we go back to the weekly chart, we have that close, pretty important. That close is really important. And we have the low, right? The low wasn't tested last week. This week, the low was tested somewhere here, but the close is the next test. So once we test the low, we want the market, I think, will attempt to overlap the bodies. We want, basically, the market will attempt to get to all the other levels in between the high and the open and the close, right? So those are levels you want to be watching. So we've got this as the open, as the low and the close. Okay, so if we then now go to our intraday chart, this is the level that we're looking at. It was never tested during this week, was it? Friday, Thursday, Wednesday, Tuesday, Monday. Actually, it was tested here. Monday at the open, it was tested here. So if we go back, this bar did open around here. Well, not that particular day, but that bar opened somewhere here, went all the way up, came down, it looks. Oopsie, not the daily. Let's go back to, yep, came all the way down and then went back to that open. So the open is an important price, clearly. And this is the thing you gotta analyze. Like, this price was tagged quite a few times there, it was tagged there, and it's obviously been tagged here. So relatively important in the sense that we've tested it twice there. We had a gap between that price and that, and yeah. So I think when we opened the day, we opened somewhere around, I can't remember, it was down here somewhere or even lower here, and then we moved up. And let's actually have a look. That's how you know. Remember, I'm using the, yeah, so we opened here. Actually, we tested the open. I didn't even notice that right now, but we tested the open and bounced. Okay, so we opened there, tested the open, went up. Okay, so I should have planned this before I started recording, but anyway, it's all good. So you can see how I'm thinking. So those are the levels I'm looking at. I would look at that. This open is important, obviously, but this open is this close. Well, close, if you check it out, you're probably about the same. So yeah, you mark that, you test that close, and what else? There's a gap here for on another chart. So let's look at the daily, which was the low of this bull bar. So I marked this low because I thought, well, we're going up. The market is probably going to try and get back to this bull bar, and therefore that's an important level. And that's a gap because we have a gap between these bull bars. So we're trying to, the bears will try and keep that gap open. The bulls will try and close that gap. And the reason why, I think the plausible reason, or if you're a bull and you bought here, you bought lower, and you bought around here, you want to get out break even. So it's in your interest that the gaps are closing. Once you see gaps closing, you're okay buying anywhere because you know you can structure your trades. All right. Okay, so we have those levels marked. We're now looking at the daily chart. On this chart, this is the electronic daily chart. So it doesn't tell you where the day session opened. It just tells you where the market opened at 6 o'clock, which was over here. And I think what happened was, if you look in the overnight session, we opened here. We had well, Friday we had a big, nice, strong bull trend. We had a bit of a wedge here. We broke out, and then we doubled the range, pulled back to the moving average, and we kept on going up sideways. And then, of course, due to a news reports, we had a lot of volume coming in, had a spike, and now the market is in a climax. And it's very difficult to determine, are we going up or are we going down? And the reason why it's difficult, it looks obvious that we're going up, right? But the problem is we've been going like this for some time. This is the biggest bar in the bull trend, and we're at a top where we sold off before. Although we are in a big bull trend, but again, trading range, we could fill and dump. And of course, on the higher time frame, if you look at the daily chart, we are technically still in a bear trend. Yes, we've broken the trend line, but this could be a two-legged correction just below the MA. Well, it's a big one above the MA, and probably we could dump, but we've closed above the MA right now. All right, so that's the daily chart. Let's look at the 1 hour. All right, so on the 1 hour, remember we had our close over here, and we've had a really tight bear channel, a pullback to above the moving average, so with chances are we're in a trading range. We pull back down to test this low, we get a higher low and possible major trend reversal. We rally, and then we find resistance at this gap area. We close this gap, this swing low. We pull back to test this low and obviously test a gap again. So whatever price between here and here, we've closed that gap, but we're still in a bull channel. However, we've broken the trend line on that bull channel. Then we go up. This is the FOMC rally, and then a nice sell off. We form a nice wedge bottom, one, maybe, no, it's not 2 or 3, but at least we form a wedge of sorts. So if you want, you can say your wedge looks like this, like that. All right, so you have the first leg pullback, second leg, or first leg pullback, second leg pullback, third leg. So right now that the market is in a climax. It's very difficult because you're not really sure whether we're going to go higher, we're going to go lower. And usually when that happens, maybe you could enter a trading range. Again, it's a big climax, way above the moving average. You're not going to get as many buyers up here. Whenever we're so far from the moving average, at least on the 1 hour time frame, you're not going to get big bars like that. You're just going to get a lot of chop or sideways. The big bars tend to come from the moving average, but right now we're all the way up here. So we open, as you can see on this bar, we open up over here, which is quite a bit of a distance from here, especially when you've been doing a lot of this. So it's very difficult to see us buying. Not to say it can't happen, because there are times when you do get, this was off the moving average, but there are times when you might just get a lot of buying around here, maybe just start going up. That in itself is climatic, but it's just that would have started a bit earlier, I think. All right, so we start off with a big, massive gap up. And of course, I don't think the bulls want to buy aggressively from there. Let's look at the electronic trading hours. And as you can see, news reports after this big sideways, and then it's the second leg up of this. So chances are we're going to pull back, and this gap is a magnet. But definitely this is a magnet, but this gap is a magnet. We didn't even get close to it, as you can see. All right, so what happens now? As you can see on the 15-minute time frame, we're going sideways already, because again, it is a climax. We're not selling off, obviously, because there's a lot of buying here. But at the same time, there isn't enough to cause this to carry on. Bears aren't selling aggressively either, because again, this is a very strong breakout. So, people are kind of sizing each other out to see how strong the bulls are. So we're going sideways a bit, and we're watching what's happening. So if we look at the 5-minute time frame, and this is where things get really interesting. Whoopsie. Come on. I always have this bad habit of clicking lines that I don't want to click, and NinjaTrader hangs up. Oh, just perfect. Wait, it just hangs up. All right, we'll use a different screen. Oh, has it unfrozen? No, it hasn't. All right, we'll use this one then. I haven't got the bar numbers on this one, so let me... Nope. All right, anyway, I will put bar numbers on. NinjaTrader has this bad habit of freezing when I just click onto a line that I don't want. Let's say, no, don't plot all the days. Show odd, show all numbers. Okay, that's cool. All right, so we'll start off talking about some of the tricky things, and then also let's draw some lines in. I guess no, it doesn't matter. doesn't matter. I was going to put the horizontal line so you can see how much you're risking. I guess I've already said so, so I'm going to put them in right now. So properties and horizontal, show grains per hour. So let's make it silver. Right, so we know how much we're risking and all that. Okay, so, and this needs to change to 5 points. All right, so that's a lot better. Okay, so let's start with this. Now we have a big, massive gap up, right? Well, the first things I always do is I mark the prior day's high, and I don't know why it's not showing here, but anyway, it doesn't matter because it's on the, still not showing. We mark the prior day's high, and what I will do actually, let me just move, oh, I can't. I was going to move it across to the other screen, so when it's ready, because I marked it. We mark the prior day's high, which is over here, but he obviously didn't test it. And then we mark other swing levels. Like this level is really important, just because if you zoom out, you can see, you know, the way I'd like to see it is we're channeling down, then we have a breakout which has failed. We pull back, we break the low, but we find more buyers, so we're still in a bear channel. So this is a bigger bear channel. Whenever the channel fails to break a swing level, it goes to test the other level, and if it breaks it below, you can then now safely say you're in a bear channel. So you can say maybe this high to this low to this low, right? Something, this is an approximation, of course. So if this was the last swing high, the next swing high, this was the last swing low here, so we know we're going to try and get down here, okay? But instead, what actually happens, we don't actually get any strength to go down here. We rally, and then we break above. So right now, we're in a bull channel, hence I've drawn this line. So what I actually did was I took, on the 15-minute time frame, because this isn't accurate, took this high and approximated to that, and then this and this, but this is just for tomorrow. Okay, so massive rally up and or gap up. We now have a massive bear bar, first bear bar of the day. It's huge. Whenever I see it, oh no, Ninja, really? All right, let me reload this, pause. All right, so I had to restart NinjaTrader. All right, let's put the bar numbers on. I take them off when I'm trading because it just takes up too many resources. Or at least I plot it only on the day I'm trading. All right, so anyway, first bar is a bear bar closing on its low. It's higher. It's really, really far from the prior day's close, very far from the moving average. I typically don't put this yellow moving average, which is the 9 MA, only when we have a gap up. And the reason why is because of what would happen when we get to that moving average. It's always a magnet whenever we gap up like this. But anyway, so we gapped up and a massive bear bar. I actually went short below this bear bar. I believe the Globex was slightly lower, and I thought it was a double top. So I saw it as a double top. So you can see we have a two legs up here, 1, 2, 3, and it formed a triangle. Failed breakout, went higher, a bigger triangle, and then round about here I decided to go short. My issue with, so I went about short just around about there, which is just around about here. And as you can see, we have a tail there. I should not have gone short here, but I was not trading that chart. I was trading this. So I see a big bear bar. I'm thinking, go short here, target the moving average, right? At least we're going to test the moving average. Put my stop up here. Then I get this bull bar, and it's closing close to its high. So this is extremely disappointing for me, because right now I think I'm trapped, and it's probably not going to work out. I get a bull bar closing on its high, and I see that this is very close to the top here. Now at this point I'm trying to decide, do I rely on my stop or do I get out above this bar? And of course I got out above this bar, only just because I think I peeked at this chart and I got a sense that this was so strongly up off a moving average. We're probably going to test the Globex high and probably even go higher. And also looking at it, it looks like a also this looks very, very dodgy for a sell. What I mean by that is you're getting a lot of tails on this chart, and then we're going up. and therefore it just didn't seem to make sense that we would make a second leg down. We've not tested this price, so it looks like we want to test that price. At least that's the way I saw it. So I went long straight after that, instant reaction, and then I held my position, put my exit round about here because this is where I was looking to exit. Now, of course, because NinjaTrader has restarted, my levels have gone. So I am going to mark that level one more time. Remember, we were looking at, and I only know this in hindsight, of course, we're looking at somewhere around here. So let's put on all charts, and let's lock it in, and let's put this as 75 there. Okay, so I hadn't marked this while I was trading because I was looking at this level, and this level again comes from this bar, right? That's all I was looking at. I wasn't looking at the closes. I generally don't look at closes per se, and I think now after what's happened, I should be looking at closes because that is quite an interesting level. Now, someone might ask me, but what if it goes past? Like, do you exit there? I only look at it as far as a reaction is concerned. I'm not looking at it for I could plan to take a trade all the way up there. I could say, okay, I'm going to partial out on this particular price, which would have been a good idea. My exit was slightly below this because there are times the market may want to keep that gap open. Obviously, they did that today. And this bar just obviously ran up really quickly, came down. I got in around about here. I got out round about there. Actually, yeah, I got out round. Actually, I could just check it out. Let me see. So yeah, got in. As I said, I went short, got out when I saw this racing up, and went long just above here. And then this ran all the way up, came back down, and then I got out. Then went short because of how violent it was. Anyway, all right, so now we're talking about the philosophy here. What's going on? I think we have a double top and a possible wedge top here. So it's one high, second high. And remember, this is a big bar, biggest bar in a bear trend. So this will probably form a trading range. And that's exactly what... Not again. This is exactly what's happened. We have a trading range, and the day became a trading range, and NinjaTrader has frozen. I'm disappointed. Let's take back to MES. Sorry, I'm just really disappointed. I always have this issue with NinjaTrader. Anyway, so what happened now? Things got rather confusing here, right? Only just because I think when I was trading this, I got hopeful. I wasn't sure whether this would be a double bottom and we'll just rally again, or whether we'll come back to the moving average and rally, or whether we'll hold this moving average and rally. Essentially, I wasn't ready to risk how much I was willing to essentially see what will happen if we test the moving average. So I took a lot of weird trades around this area. As you can see, I'll just mark that. Took a lot of weird trades, went short below here. Then I got out of my shorts here, went, and then got out some more here, got out some more here, got out some more here. So it looks like I was in short quite a bit, and I started partialing out. Then went long because I thought this is a wedge. 1, 2, 3. So went long here. It was a bull trap, and that's because we have a leg down, a very strong leg down. We're going to get a second leg, and that formed the bigger wedge. So if we look at this, it looks something like that. Just something like that. We broke the trend line here, tested the low, and it started to rally. I went long here, and I think I added to my longs. No, I didn't. I went long here and then targeted this bear bar's low. And that was my trading for the day. Now, to talk about what was going on, like I said, we formed a trading range. So we have 3 pushes down, 1, 2, 3, and we have 3 pushes up, 1, 2, potentially 3 here. I actually don't think we've tested this high yet, but we haven't actually. It's a trend in a trading range, so you can say this is a leg in a trading range, a leg up in a trading range. And that happens whenever we get climaxes. We form trading ranges. I mean, look here, climax, trading range, climax, trading range. So you get a leg up and a leg down, and then we decide whether we're going to break down or we're going to carry on the trend. And here it looks like a break up, a pullback to the moving average. And it looks like traders are just not as convinced that we are going higher. So it looks like we're just staying sideways. As a result, the bars go slowly up. But they don't actually get to the high, which was slightly disappointing. We have a really nice push up here. And this is where those channels I was drawing at the... Yes, did not load. We're drawing at the beginning of the day was, in the sense I was trying to figure out. So we have one push here. I thought this was a second push, but it looks like this is a second push. I mean, it is a second push, but it's still part of the push. So we have one push, a pullback, a second push, a pullback. So we go 2 legs sideways to down, and a third push. So this is your wedge, right? We broke the trend line here. You use these 2 lines, broke the trend line, tested the extreme, and then we now had an attempt to try and get back down here and reverse the trend. But this became a bear trap. They held a moving average. This tends to happen whenever we're going for another leg up. And also it was a double bottom of this particular bar's low. You could buy this bar. I did consider buying this bar, but I think at this point I was really tired. It was a Friday. I thought I can't be bothered taking any more trades. Buy this bar. A nice attempt to break out. Went sideways. A higher low double bottom. So we now have a channel, or at least we can start drawing a channel because we now have a potential low. Extend that and join the top, right? So we get one push, pullback, second push, sideways, third push, pullback, and then this is a double top. This is a third, fourth push attempt, and it goes sideways here and forms a trading range. This is a wedge top, so you can argue 1, 2, 3, or you can even say 1, 2, 3. I want to say 1, 2, and 3. And this is the breakout of the wedge, breakout of this tight channel here. So if we draw this channel, maybe something like this. Maybe that's what it was. Nah, it doesn't look like it was like that. Okay, that's not right. But anyway, we have a breakout of a channel because we break below here and we close on our low. So it's the first leg down, pull back, second leg down, pull back, and a third leg down. So this is a wedge. So we draw this line all the way down here, drawing the highs. And that's what's happening here. This is a really tight range. We get a nice double bottom. We test this price 3 times, 1, 2, 3, and we fail to break it. I remember saying to friends at the time that this price is pretty important. Why? Because if we break it the 3rd time, then we probably will come down and test this level or test this level, at which point we're probably not going higher because we've already broken below the wedge. We will test this moving average on the 15-minute. This is the moving average, but instead we went up, and this is where we are at. So all in all, it's just a trading range. We have 2 legs down, 1, 2, and 2 legs up. 1, pull back, 2, or you can say 1, 2 if you want. But whatever the case is, that's how you would have traded the day. I would have looked at it from that perspective, that we had 2 legs up. Depending on how strong this is, because you could also argue, well, but this is so strong, we'll probably get a second leg down. But I think, first of all, we close the gap here, and this bar, we close the gap here, even before we got here. So, and this was a really strong breakout. I think this set the tone for the day. Once you had this breakout, 4 bull bars, of which 3 of them are really big, you know you're going to get at least a measured move of this breakout up here somewhere. We've got a bear trap. So you're already convinced that we are going higher. Maybe we might get a second leg of this on Monday. Maybe we might come down here. The thing is, if we do that, that will be a double top, lower high, and chances are we would, come back down, maybe test this level. If we get a breakout above, then I think the gap, well, a breakout above obviously will break that, but I think we will now try and test this bars open, and try and get back to the top up here. I think those will be good levels to check, because again, this is the moving average here. We're going to get a nice gap up, like a gap space. And what I mean by gap, see how we have a gap between the moving average and these bars over here? We're probably going to try and get another gap all the way up. When price gaps too much, we tend to go sideways. Like here, gap too much, we go sideways. Gap, sideways. We tend to do that whenever we're at the end of trends. So we move up and then we gap too much, then we pull back. And I've now started to understand why we get this much selling. It's actually a really good setup. When you move too far, nobody wants to buy up here, obviously. So this is a great place to take a short for a scalp to the moving average. So I started looking at opportunities to do things like that. A huge gap up. This is why maybe taking this short would have made sense back to the moving average. This didn't work, but the next one did. Unless you get continuous buying, which is 20% of the time you get that. But most of the time when you're just so far away, you're going to get a nice pullback to the moving average. All right. Thanks a lot. I'm sorry for the technical issues that I'm having.